Today's video is divided into 3 parts. First, we'll break down Goldman Sachs' latest macroeconomic report, a thrilling uncertainty trilogy of investment, hiring, and consumption. Next, we'll dive into the AI supercycle and future tech trends, robots, quantum computing, and nuclear power. And finally, we'll talk about one sentence from the FDA that sent AI drug development stocks flying. Goodbye lab mice, hello algorithms. Part 1, Goldman Sachs Macroeconomic Report, the Uncertainty Trilogy, Act 1. Welcome to the uncertainty roller coaster. Since the new president took office, the policy uncertainty index has surged even higher than during Trump's trade war era. Especially with all those tit-for-tat tariffs, the global market is left scratching its head. What's the next policy move? How will other countries respond? Are more shocks on the way? With no clear answers, the economy hit caution mode. As uncertainty rises, investors, business owners, and consumers all fall into confusion. Act 2. Corporate investment wallets clench tighter. Business owners be like, should I invest now? But what if policies change? According to Goldman Sachs, for every 10-point rise in policy uncertainty, investment growth drops 0.3 percentage points. This current wave has already slashed investment growth by 5 points. In the year ahead, investment will likely stagnate, and there's a 45% chance it could decline. Hardest hit industries: manufacturing, especially electronics, machinery, home appliances, and chemicals. These sectors are capital intensive, with long payback periods. One policy twist, and profits can vanish. Act 3, hiring hits pause. Keywords in the job market: hesitation, caution, contraction. 3 main breaks: unstable trade policies, manufacturing hires 20,000 fewer workers per month, budget cuts, federal government hires 25,000 30,000 fewer per month, federal funding squeeze, healthcare, education, local governments cut 35,000 hires monthly. Prediction: hiring will slow to just 100,000 new jobs per month by year-end, well below the norm. And if immigration policy tightens further, labor supply could drop, pushing up the unemployment rate. Act 4, consumers zip up their wallets. Consumer mindset: better not spend, what if I lose my job? Triple whammy: stagnant wages and unstable jobs. Tariffs acting like stealth taxes. Stock market slump draining wealth and confidence. Goldman Sachs predicts, last year, rising stocks boosted consumption by 0.5%. This year, that flips to a minus 0.25% drag. With job fears rising, savings rates go up, and consumer spending goes down. Act 5, how to track uncertainty like a pro. For investment, watch business surveys, investment sentiment, listen to earnings calls for cautious language, monitor factory construction and capital goods orders. For hiring, track employment confidence surveys, Atlanta Fed, regional Fed data, focus on sectors like manufacturing, healthcare, education, and government. For consumer spending, monitor big-ticket item sentiment, cars, homes, use fast data platforms like Adobe and Redbook to track retail activity. Summary: the uncertainty trilogy: investment, down 5 points, businesses in wait-and-see mode. Hiring, 100,000 fewer jobs or month, especially in public sector. Consumption, shrinking income plus falling stocks plus shaky confidence equals slowdown. Tracking tools, surveys, earnings calls, and fast updating data become a detective. In one sentence, when policy is uncertain, it's like storm clouds overhead. Businesses freeze, workers stay put, and consumers stop spending. Part 2, the AI supercycle and future tech, robots, quantum, and nuclear. 1.
For 60
Tech
years,
supercycle.
Software 1.0,
Think of it as a tech bull market marathon. We're entering a tech supercycle, like the steam engine or the internet. General purpose technologies trigger explosive growth across industries. Today's magic word, artificial intelligence. But it's not alone. AI is joined by advanced sensors and biotech. These 3 lift each other up. When one evolves, the others surge, creating a high-speed tech flywheel. 2. AI is not just for art. It can help you lose weight and beat cancer. Sure, AI can help you write or edit photos, but it's also making waves in medicine. That famous weight loss drug GLP-1 like Ozempic, AI helped design it. Even crazier, cancer vaccines, not science fiction, but real progress thanks to AI accelerating drug discovery. One day, we might actually say, thank you AI for saving lives. 3. Why are robots hot again? Didn't we have Tin Men decades ago? Old school robots failed because they were dumb and had bad vision. Now, AI brains are sharper, chips are faster, sensors are next level, robots are finally leaving the factory and joining the real world. We like NVIDIA and Tesla's robotics vision long-term investment worthy. 4. Investors, don't panic, play the long game. Some investors freak out over every new Chinese AI model or company price war. Afraid of missing out, they sell at the worst time. But remember, tech trends are marathons, not 100-meter sprints. If you trade like a news chaser, you'll get exhausted. Have vision, not FOMO. Otherwise, you're just making fear trades which only reward the bold, not the panicked. 5. Future tech watch list, quantum computing, and small nuclear reactors. Yes, AI is all the rage, but don't sleep on these up-and-comers. Quantum computing is not ready to run your games, but in finance, insurance, and pharma. It'll be a game changer. Small nuclear reactors sound C5, but they're actually being built. They take years, but might solve AI's massive energy needs. These will take time, but should be on your radar. Summary: don't chase the hype blindly. If you want to ride the tech wave to wealth, master to things. Long-term thinking, don't trade on headlines. Look at overlaps AI plus biotech, sensors, robotics. More general-purpose technologies are coming. Think quantum and the fourth tech wave. Remember, investing isn't like buying snacks at a market. It's about what you're really betting on. The AI of today or the potential of tomorrow. Part 3. FDA drops a bombshell: AI replacing lab mice. Biotech stocks soar. The FDA just dropped a major announcement. Future drug testing may not need mice anymore. AI drug discovery firms instantly went into rocket mode. Stock prices surged. Spotlight on 5 hot AI pharma stocks: RXRX, CERT, CELP, ABSI, CGR. They all share one mission: using AI to discover drugs without animal testing. 1. RXRX, the coders in lab coats. This team uses AI plus microscope imagery to find new drugs. Think of them taking cell selfies and letting AI figure out which drugs can rescue them. They're also building their own platform and are close partners with NVIDIA. If drug discovery moves toward image-based research, RXRX is a frontrunner. Vibe, cutting edge, like the Tesla of the lab world. 2. CERT, the modeling experts of pharma. CERT helps simulate drug trials inside computers, no real injections needed. Think of it as Sims for drug testing. This saves drug companies time and money. What's not to love? Vibe, practical, behind-the-scenes hero. 3. CELP, where scientists and mathematicians marry. Like CERT, but with a longer history. They simulate drug effects on organs like the liver, predicting toxicity, absorption, etc. Basically, they run the experiment in the virtual world before it even exists. 5. Veteran, cost-efficient, widely trusted. 4. ABSI, AI alchemist meets protein wizard. They combine AI drug design with actual bioplatforms to synthesize those drugs. In short, design, produce, and test all in one shop. Imagine a future where drugs are 3D printed. ABSI is both the printer and the software. Vibe, bleeding edge, perfect for future-focused investors. 5. CGR, Schrodinger's cat, but for pharma. Named after the quantum physicist, not the cat. They simulate molecular structures using AI plus physics, running thousands of virtual trials before any real lab work. This saves huge time and cost for pharma companies. Vibe, geeky genius with a Wall Street twist. FDA, let's stop scaring the mice. FDA says animal testing is outdated, slow, costly, and imprecise. So they'll allow AI toxicity models, organ-on-a-chip testing, human data simulations. FDA chief, faster, cheaper, safer, and the mice finally get to relax. But is this really ready? Experts say, promising, but not yet practical. Chinese expert Liu Zhao notes, even if we fully map human genes, the body's way more complex. AI can't replicate all the weird edge cases. Some diseases are too subtle for models or lab-grown organs to replicate accurately, and we don't even have enough high-quality data for many AI models yet. If the FDA opens the gates too quickly, someone might skip straight to human testing with dangerous consequences. Reality check. Real implementation may take 10 plus years. Experts estimate a full AI organ-based replacement for animal testing is at least a decade away. Add in data access restrictions and geopolitical tensions. Tech may still need a cane to walk forward. Final thoughts. The AI drug revolution is here, but still in beta. FDA's decision gives AI biotech stocks a major boost, but turning hype into real-world impact still has hurdles. For now, lab mice still need to work overtime, but retirement might finally be on the horizon. That wraps today's video. We broke down Goldman Sachs' economic outlook, the uncertainty trilogy, then explored the AI supercycle and future technologies like robots, quantum computing, and nuclear energy. Finally, we spotlighted hot AI biotech stocks that are shaking up the pharma world. If you enjoyed the content, don't forget to subscribe, like, and turn on notifications. See you in the next one.